What's up everyone, it's Kadi with MoneyVest. So in this video, we are going to be talking about TLT and TMF. It's been some time since we've talked about the bond market, and I think it's really important to discuss the implications of a new president starting in November after the elections. We still don't know who is going to be the former and official running candidate from the Democratic Party. But because this is such a fiscal debate, I also wanted to go over the percentage change in the overall fiscal deficits and the national debt broken down by presidency. And then, of course, we'll take a look at the interest rates and what the expectations are, the bond market, and why I feel that, yes, there is an opportunity for TMF and TLT over the long term, say 12 to 18 to 24 months out. So hope you all enjoy this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining. And of course, getting access to all the MoneyVest benefits, including all the trade alerts and trade ideas, as well as my buy and sell alerts, options alerts. I closed my Tesla covered calls for an 84% profit, and I did pick up a bit of IWM, VUG, SMH. I did pick up some shares of that as well. So again, if you want to get access to all the alerts, links going to be down below. And also do check out our MoneyVest platform. And the 16% annual discount expires at the end of this month. And the 51% discount on the pricing also expires at the end of this month. So this right here is the entire platform. We recently added the macro dashboard where you can access the earnings, and the economic calendar is also going to be coming out, but we've got the earnings calendar already there, and you can toggle between previous week, next week, and a lot of other really cool features are on the way as well. So links going to be down below. Again, we'd love to have you on board. So this right here is where we are with the TLT. And of course, as we know, the bond market has had its worst performance in the markets going back over 100 years relative to the stock market, 42% down from its all-time highs still, and trading down to as low as 92.55. This is the 20-plus year Treasury bond ETF. And we've talked about how as interest rates were getting increased, there was again, the US 10-year treasuries were obviously following up with that because they were pushing higher and higher ever since the Federal Reserve started increasing interest rates towards August 2020, when inflation was obviously higher. And as a result, we are now sitting at 4.260%, of course, with a recent record high of about 5%, and then coming back down to as low as 3.7, pushing back higher to 4.7, and then settling in around 4.2.5% at the moment. Now, coming over to the expectations, the markets are quite optimistic with interest rates coming down, with this right here, the meeting in 8 days being the last meeting where interest rates stay where they are at 5.25% and 5.5%, with a 97% probability that we're going to stay at these levels. And then starting September, so September 18th, 2024 is when the next meeting will take place, with the summary of economic projections is for the Federal Reserve to deliver the first interest rate cut. That's what the markets are pricing in. Second rate cut coming in November, so November 7th on my birthday, 52% probability. Then another rate cut priced in for December with a 46% probability. So in other words, 3 rate cuts are being penciled in by the market. So that is a lot of optimism from the markets right now with regards to rate cuts. Now, we've talked about fiscal deficit and how that actually plays a very significant role, because if there is a lot of deficit in the United States, how are they going to fund those deficits? By borrowing more money and adding to the pile of the national debt. And they do that by issuing a lot of bonds. And if they issue a lot of bonds, of course, there's going to be more supply of debt, which is government debt that they're issuing to other governments and other corporations and investors worldwide. And if there's a lot of demand for those bonds, what happens is the price continues to be higher because there's more demand than supply. Price is higher, yields are going to be lower. But if the opposite happens, if there's a lot of supply of government debt and there's not enough demand, then supply overrules and price comes down because of the more supply, lack of demand. And as a result, yields go higher because of that inverse correlation. And the yields, in other words, are not attractive enough to gain more attention from investors, and they want higher yields. And as demand is not there, yields go higher, and that's when the demand starts to come back in, considering that there's a much higher interest rate on the 10-year treasuries, 5-year, 7-year, 10-year, 20-year, 30-year, whatever time frame we're talking about with regards to the government debt. But the bottom line is that this, again, is a very important proxy for all interest rate setting standpoint. Mortgage rates are pegged against the government bonds, auto loans, credit cards, everything's kind of pegged against the US government treasuries. And 4.26% is where we are, with the market's expectations for 3 more cuts later this year. But again, if there's continuous supply, if there's a lot of deficits, if the national debt continues to go up in an unsustainable fashion, something that Jerome Powell and the monetary policy has already mentioned, that this is a very unsustainable path long term. If that continues, then obviously we're not going to be in a great situation, considering that at some point this ticking time bomb is going to come due. Now, talking a little bit about the history of the US debt, broken down by different presidents. Again, I don't want to get too political here in this video. We're going to keep aside the different parties and different presidents, but just kind of show you exactly how the debt has increased over the years. So going back as far as, let's say, 1989, 1993, George Bush saw an increase of over 54% and increased the deficit by 1.5 trillion to a total of about 4.4 trillion dollars, right? So a significant number even back then, 4.4 trillion. But we've come a long way. I mean, we've come a long way in the last like 30 years, because it's gone from 4.4 trillion to where we are now and well over 33 trillion dollars. And you'll notice the majority of the increases have come from George W. Bush. That 8-year span increased over 105%. By the time Clinton left office at 5.8 trillion, we were at almost 12 trillion dollars. So more than doubled in that 8-year period. And then when Obama took over, that was almost a 70% increase in that 8-year period to over 20 trillion dollars. Then we had a 40% increase in about $28.4 trillion by the time Trump left office. So that was an increase of $8.18 trillion. But one of the things to notice here is that Trump saw an increase of $8.18 trillion in deficits, which is equivalent to Obama's $8.3 trillion in a 8-year period, right? So in other words, Trump was definitely spending twice as much as Obama, because he increased the deficit, in other words, the national debt, by the same amount in half the time. So that, of course, was a significant increase by over 40%. Yes, percentage-wise, it's lower, but in actual dollar terms, it is significantly higher. And Joe Biden spent equivalent to what Obama did every 4 years, which is 4.7 trillion. So that is, again, only a 16, almost 17% increase for President Biden. And that is, again, 2021 all the way to where we are at the moment. So, depending on who ends up, of course, getting into office post-November, the odds or the betting obviously is more inclined towards Trump right now. As we know, Elon Musk has been endorsing Trump. Bill Ackman has openly endorsed Trump. Ben Shapiro, there's a lot of people, a lot of popular names and big names have started endorsing Trump, and the odds are tilting a little bit more in favor of Donald Trump, especially after Joe Biden has dropped out of that race. So if that increase is going to continue, there's a possibility that we do see a lot of supply of bonds, issuance of government debt, and if the demand is, let's say, not as strong as what we're used to seeing because the debt level continues to increase, then it's possible that interest rates do remain higher for longer. And I think that's one of the reasons what's keeping me from investing in TMF or TLT right now, is because we are entering an era or an environment where interest rates unfortunately stay a little bit more to a higher normalized level. Like, gone are the days when we see interest rates down at 2% or sub 2%. I think if we do see a bit of a pullback in the US Treasuries, the max I could see it come down to is about 3.25%. That's about a full 1 percentage point lower than where it's trading at the moment. And the max, like literally the bare bottom, is where I see the 10-year Treasury settling down to, is around 2.7 to as much as 2.5%. That's about as low as I could see Treasuries going down to in the long term if rates cut really do continue on the back of inflation numbers coming down. But if that doesn't happen, then it's possible that rates do stay higher for longer, keeping TLT and TMF, some of the ETFs that continue to somewhat underperform. Now, that being said, coming over to TLT, there is a little bit of asymmetrical triangle formation with some lower highs and some higher lows. So if you do see, let's say, a breakout after coiling into this pattern, so this right here is going to be the higher lows, lower highs, higher lows, we continue to coil in. And if you do see a bit of a breakout, there is possibility for us to retest up to as much as 104 to as much as $105 per share. So that right there is going to be that resistance and that target to watch, where we have gotten rejected not once, but twice, 3 times, multiple times we have gotten rejected in and around those prices for TLT, with a very strong support at $87 down to $78 per share. But until I get a clear idea, clear sense of a couple things. Number one, who's going to be in office post-November. Number two, what is going to be the situation with regards to the budget office, congressional budget office, and what's their plan with regards to the deficits and what's going to be the government spending. So it's going to be more of a fiscal debate. And number three, what is going to be the monetary policy situation with regards to interest rate cuts? What's going to be the summary economic projections released in September? And what does Jerome Powell tell us in 8 days with regards to the future of interest rates? And the fourth thing is going to be the trajectory of inflation. So once we understand those 3 to 4 things that I just mentioned, then we can sort of better understand if there is really an opportunity here for TLT. Otherwise, it could be a stock, it could be an ETF that could just trade sideways for some time until we gain further clarity on where all the things that I just mentioned are headed. Where interest rates headed, where is inflation going to be, let's say a year from now, and that's going to help us better understand what is going to be the trajectory for interest rates. That in turn is going to help us determine whether there's value in this trade or not. But for now, I'm just going to sit tight, wait for better clarity or certainty with regards to the things that I just mentioned. Support level is going to be $87 down to 78, resistance all the way up to as much as 104, with of course those moving averages sitting all the way up to $111 a share. Same thing is with TMF. It's a little bit more levered, but it's been trading in this pattern, consolidating sideways. Support level between 37 and 43, resistance 64 and 71, and just a lot of consolidation sideways with of course significant downside from its all-time highs of well over $461, down almost 90%. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel. Also, don't forget, join our Discord and our Patreon if you want to get access to all the benefits, all the alerts, trade ideas, options alerts, as well as the MoneyVest platform. We can access the earnings calendar. It's a new feature. Of course, you can come over to all individual stocks and do your full fundamental analysis on them as well. Look at the MoneyVest metrics, again, plot for a lot of different amazing charts, visualize a lot of the data, and again, look at analyst estimates, ratios, and we're going to be adding a lot more features over time for these individual stocks that are on the platform. So link's going to be down below. We'd love to have you on board. As always, happy investing. I'll see you all in the next video.